I'm joined by HSBC's Global Head of Emerging Market Research, Pablo Goldberg. Thank you so much for joining us, Pablo. In terms of, we're concerned that a lot of this free money and this QE2 is going into emerging markets where we're going to see asset bubbles. How concerned are you about this?
We are actually quite concerned. We've been writing a lot about this topic, about what QE means for the emerging markets, and actually emerging markets are responding to that with quantitative tightening. We see emerging market economies putting up capital controls to prevent some of these inflows coming in. We see central banks in emerging markets increasing reserve ratios, trying to prevent this money coming into flowing, into lending into domestic economies. There's some sense of overheating in some of these economies, and this is a little bit of the reaction of the lack of growth in the developed markets.
So they still seem like a safe bet for investors to be in?
Yes, in a large extent they are. Now we're seeing a little bit of, a comeback of those bets on emerging markets back into the developed markets because of the increase in the US Treasury rates. But this is probably more of a temporary phenomenon. Still, the long-term growth of emerging market is a very attractive proposition for investors.
Pablo, what's your biggest bet at the moment? Where would you say that investors should put their money? Does anything look more attractive in terms of region or in terms of individual countries?
Right, what we're seeing actually is a potentially rotation going forward with the Treasury actually yields rising. We see a rotation potentially out of fixed income investments in emerging markets more into equity investments in emerging markets. This is also what we're seeing in the developed markets. When yields are so tight right now that you probably want to see or being in an asset class that is not bounded by these very low yields. The pressure of rising treasury yields is suggesting this kind of rotation is making sense.
But so where are the pockets of growth that you see in terms of the equity markets? It's across the board for all emerging markets, or is it countries such as Brazil, Latin America, as opposed to Asian countries?
No, I think we're generally bullish on emerging markets as a whole. Growth, demographics, very stable debt dynamics are something that would continue to attract money into emerging markets. Remember, emerging markets as a set of countries is going to probably be a third of the world GDP in a few years. So this means that that's where you want to have your money in.
There's a concern, of course, about what's going on with South and North Korea. Is that going to affect the perception of those emerging markets around that part of the world?
Well, obviously, this is an issue of concern. Geopolitical risk is one of the other risks that we're having right now. We have in the Eurozone problem, we have in treasury yields rising. There's a lot of headwinds against the emerging market as we speak. But in the long term, we are hopeful that the situation will be resolved in a manner that will continue to attract capital to the region. Asia is one of the regions we actually were more bullish about.
Pablo, can you tell me today if you think that equity markets are going to start increasing in emerging markets? By how much will they increase? 15, 20%?
Well, it's hard to put a number, really. Still, there's a lot of uncertainties, but we really expect that we're going to have some double-digit returns this year.
Pablo, thank you so much. Pablo Goldberg there.